Right, so time for impact is the fact that we are moving through this time where we have got a huge growth in impact investing, which is this idea that money is going towards where it can make a difference. And there are more and more people that are getting together where they're combining their focus, not because of a particular asset, but because of a particular impact or purpose that they have. There's not a single person right now that's out there generating significant returns that isn't focusing at building that impact as well. And that's why we actually even call this the Impact Investor Festival, because it's about what impact can your investments have on the world. And if you start thinking in that way, then you're all going to be finding the best purpose-driven assets in whatever it is that you're actually doing. And the growth is dramatic, as you can see here as well. So we're really riding this wave as we go. And I believe we have got Mark Robinson on the line right now. Good to see you here. How are you doing?
Yeah, good, Roger. You?
Yeah, very good. Very good. Just from the things I've been sharing, I think we're both in the same situation where 5 years ago, or even 10 years ago, most of us had a sense things were coming, but we weren't talking about things like NFTs. And we kind of heard about Bitcoin, but we didn't know all the details that we know today. I'd love for you to just share, a bit of background about when was it that you really started realizing how important all this was, and how that then led to all of the mentoring you're now doing in your institute.
We've been teaching this philosophy now for over 5 years, and people thought we were crazy, or actually more, about 8 years ago.
So I'm going to show you a couple of things about Mark and also about what we're going to be talking about as we go through here, the plan. Just so everyone gets an idea of this, if you think about your own strategy right now, are you currently thinking about buying either a stock or share or a property based on deciding on a single asset? And if so, well, then you have to move from an asset plan to a portfolio plan, which is everything Mark teaches. And this is where it's about making decisions based on what the portfolio performance is. This is no different from being a fund manager. Success depends on the plan, which means you might even sell something that looks like it's successful, but it's already achieved its target that you wanted, and it's actually already achieved its target for the portfolio. You might actually sell something which is underperforming in order to actually rebalance your portfolio. And all the decisions can be automated, which means this is what Ray Dalio did. He turned the whole thing into algorithms, and all the best fund managers in the world, this is what they're doing. Kathy Wood does this, right? Where she's got all the research and says, well, how do we make decisions of when we're in, when we're out of things, which means emotion can come out of it, and you can then be thinking about the long term. You can't predict anything in the short term, but you can predict things in the long term. As Mark says, I credit Mark for this, and then Mark credits his mentors and the people that brought this up in the past. Most of us know this, right? Which is your financial advisor, or even like the media will say, how much are you putting in stocks? How much are you putting in bonds? How much are you putting in real estate? How much are you putting in cash? Without really understanding, no, stocks have got everything from foundational stocks, which are very defensive, through to fast growth stocks. Cryptocurrencies have got everything from something you're holding for the long term that's actually giving you stability compared to something which is giving you very high returns. And we do have criteria. I'm going to be covering this a little bit more tomorrow, but there are 8 criteria that all investors tend to use, whether they know it or not. I'd love, first of all, Mark, if you could just take everybody through a bit of a sense of what's the difference between a foundation asset, a wholesale asset, a focused asset, so everyone at least can get a sense of it. And then from there, we're going to kind of go into some examples here.
Yeah, okay. So your foundational assets are things that you're looking to keep forever. Doesn't mean you always have to, and I love that video you shared the other day about, boring 15% compounding. We've had access to literally something that's paid 15% per annum for the last 12 years. And it sounds boring, but that's what it's there for. It's to help you build your foundation. Things like wholesale assets, and that's where you're buying like below fair market value, or I call a quality asset at a discounted price. I like the impact asset sector, Roger, and we're actually changing ours from focused asset to impact asset because it makes more sense there. And I love the fact that you talk about ETFs, because that's the best way to look in when you're looking at those impact sectors. You're looking to get around that 20 to 200% return, and they are, again, achievable. And just another point on those bottom 3, quite often you're chasing that capital growth more than cash flow as well. So that's sort of, whereas the next 3, you can also be looking for that cash flow. And I love the fact that you've got Marcus on board, because we don't do any education in that trading space for crypto. If you really want to learn active trading, I highly encourage you to, in crypto, go to someone like Marcus, because it's absolutely critical that you understand it. My favorite one is the wholesale cash flow. And why I like wholesale cash flow is because we've tapped into that automated system. So there's a company that we have that automated share portfolios. Last year, my share portfolio made 73%. The year before, it made 28%. What I want you to understand, guys, is when you truly get the pyramid and you get those allocations right, you know how much capital you can put into every single one of these and the targeted return that you're aiming for. And I like the fact that it's built like a pyramid for a reason, team. It's because it's going to last forever when you get the allocations right. Now, there's no better time to build your portfolio right, because the velocity of cash right now is ridiculous in every single market. So getting into a pre-ICO or a pre-IPO, to me, and we've got a 3 to 10 year period. I think IPOs these days will be more like sort of 1 to 4 years or something. It's got the time frames a lot shorter.
Absolutely. And I do want to also, just for everyone here, if you're thinking, well, why is it that all these things are going up? Because we talked about that. And yes, part of it is because of the government printing money, but also part of it is about the system itself. Because if you think, well, what does it mean when the government, in the US government, does another $1.9 trillion on top of the other $6 trillion that's already done? What does that actually mean? What it means is that the basically central bank, it actually provides debt to the banks. They say, okay, we'll give the banks the money. The banks can then lend it out to others, fractionally lending, which means they can multiply the amount that we give them and lend it out. What the bank then does is basically then say, well, who are we going to give the money to? Well, we're not going to give it to the person that isn't paying their rent, right? So they don't have no credit score. So instead, we'll give it to the person who's got all the money already. That we'll give it to the investors, we'll give it to the institutions. And so they're like, well, what are we going to do with this money? We're going to go invest it. And they put all the money investing. And even when places like America say, well, we'll just give checks to everybody, so everyone gets another $2,000. Well, what do those people do with it? Well, in most cases, they're like, well, I don't want to lose this money and I can't spend it right now, so I'll put it into the market as well. So the money's not going where it needs to go. And some of you might have seen, this is super scary, but this came out just yesterday this happened in the last 24 hours. Federal judge strikes down moratorium on evicting renters. At the moment, 1 in 5 Americans are behind or struggling with their rental checks, and a whole bunch of them are ready to lose their property. The government's actually held off this for over a year and a half, or just over a year. And so while there's lots of people out there who are actually saying, look, I've got to get my money out of the dollars and put them in other things, there's a lot of people that don't get this. And they're unfortunately the ones that are really going to struggle the most. So we are living in a time where you don't want to be on the wrong end of this going forward. It's not about, well, maybe I'll just do it tomorrow. You really need to be thinking about how you're managing your money and whether you're getting financially educated in these areas as we go as well. And let's see what this looks like when we break it down. You think about this being the South Pole, which is what are the things you're going to invest in. The North Pole is who you are, right? Because if you want to create attraction or magnetism, you're going to have a North and a South Pole. So the whole idea of an impact investor is someone who is doing something not just for the profit, but also doing it for the purpose, also doing it for the passion. And so you all, I'm sure, are aware of the Ikigai concept. If not, this is the slide which explains it, again from Japan, which is basically a link between what you love, which is your passions, what the world needs, which is your purpose, what you're good at, which is your talents, and what you can get paid for, which is basically your business model or even your investment portfolio. We're going to come back to this today to actually find out what your actual score is. So if you don't know what your score is, you're going to find out and realize that having the right investment portfolio will allow the score to grow. But this is personal to you, right? You are a one of a kind. And we obviously have got all these different tests we put together for passion tests, purpose tests, and so on, which are all free, which allows you to find this out.